All right, so I assume you were able to hear me now. Sorry about the glitch. Let me also check it once. All right, okay, I could hear that. Okay, let me quickly share my screen again. I know I did speak quite a bit there. All right, so let me share my screen again. I'm not on video for today, but it's all right. Okay. Screen. All right. So I was saying yesterday, the 200 DMA, it took a support at 200 DMA exactly. So if you look at the, let's say, 5-minute chart rather. So in fact, 200 DMA technically breached. If you go back to the number, exact number, it would be somewhere around 24,552 or 24,500, I think. So it, I think very briefly, it got breached. I think it's, yeah, around 3 o'clock or so. And then after there was some bit of a buying, and then that's where it kind of looked at, took a bounce back. But I think today is going to be a little crucial, right? So if 200 DMA breaks, then definitely there is going to be some bit of a challenge, and then there is going to be some bit of a down move. So now let's look at what were the occasions earlier 200 DMA was breached. In fact, even the election, post-election results that did not breach 200 DMA. But then the previous occasion, it happened back on, when was this? This was 13th of March, which was almost, I would say 1.5 years ago. This is the first time that, or the last time this was broken. But then if you look at carefully, it tried to breach, in fact, January 1st, 2023, and then it did not happen. And then after that, again, there was one more attempt made in February end. That also did not happen. And then obviously there was some bit of a, I mean, people call this as a dead cat bounce, right? So there was some bit of a bounce back, but then again, that did not really sustain. But then once Nifty crossed 200 MA, definitely last 1 year, or probably keeping aside the October month, last 1 year has been quite a bullish market for Nifty. And yeah, I mean, that definitely continued till September 26th, I think. Yeah, September 26th. I think September 27th onwards, there was definitely a downfall. And then before this also, there were some occasions Nifty fell down. In fact, breached the 200 MA. This was back in 2022. And then, I think definitely, I'm sure COVID time, it did happen. Yeah, COVID time also did happen. COVID time, 26th February itself, it did break. And then once 200 DMA is actually comes back, usually the market would actually goes on the bullish mode. So I think today is being an expiry for both Nifty and also Sensex. So we can expect a highly volatile day, especially Sensex. Is highly played around if you are trading in Sensex. So my suggestion is to, as much as possible, try not to trade today. I know it's not a wise advice, but then if you are really tempted, I would suggest you can probably, now anyway, Bank Nifty is monthly expiry. I think probably better to pick up Bank Nifty and then stay there, or otherwise if you wanted to really do, you always have 21st November expiry, so you can pick up some of those and then see how you would actually do the trading. So one more, I think I was looking at the FII data. Let me share one more my screen. And all right, this is from Sensible. So FIIs, I think I'm just looking at the, let's look at the cash market. I think cash market is no brainer. FIIs were the net sellers, and that still continues. And then the DAs were the net buyers. I think that is also still continuing. And I think if you're following, FIAs have been net sellers from September 26th, I think. And I think that is still continuing. So if you look at the FA history, and that is also doesn't look so great, especially from the cash segment perspective. If you really look at bearish, bearish, bearish. I think as of my last calculation, it probably would have reached about 11 billion. I think 11 billion USD as of now. But I think overall, I mean, in the scheme of things, that percentage still looks definitely smaller. But then that definitely contributed to the bit of a bearish movement. But look at the options and futures, and I think probably go to the summary. Index options, which probably would be more interested. I think only the clients were bullish at this point of time. They bought, I think they sold a lot of put options, and then I think predominantly looking at the recovery. And then FAs are also a little bit bullish, and but index futures will probably exclude for now. We'll come back to that a little later, because they'll have a lot of hedging there. So I don't think we need to be much worried. Put options, again, they're medium bearish and mild. So today I would think it's a flat to some bit of a bounce back. That's what my assumption. But let's see how the market would shape up, right? So again, today's bounce back may not be the decisive bounce back. There could be definitely some bit of a retracement, and then and today is being an expiry day, there is going to be a lot of volatility. There will be a lot of up moves and down moves. So my suggestion, as I said, again, I'll repeat, in case if you're trying to do any trading, better to not to do the today's expiry, but then you can always pick up the previous day expiry, right? I think open interest, again, 24,000 seems to be a lot of open interest, and then this definitely will act like a resistance for today. And also you have one more 23,800, and then you also have 23 strike. So I did exit some positions yesterday. These are all my positions, and let me explain the rationale. So this is basically in case if there is a bounce back, I thought I'll use this. And if that doesn't happen, I'll look at the opening, and then in case if even if there is, I'm able to make some 50K, or maybe if there is a definitely opening is going to be a little bit green, and then this is going to really turn into. And in case if it is falling down, and I'm going to get into losses of about 2.4 lakhs, and I will compensate that with one of the, I'll sell some CE positions here. That's the plan at this point of time. And then 28th November, no brainer. It's basically a simple triangle with a almost like 4.1 upside, and then the 2.6 downside. Again, the reason I had put less percentage here, mainly to, I would think, probably is the fall somewhere it has to stop. In case if there is a further fall, I'll have to bring the CE position bit closer. I think that's the plan. And then I also have I have exited some positions yesterday, but right now this is predominantly a wide range, about overall 10%. Top side is about 6%, bottom side is about 4%. I think these are the positions that I have. And if I make some money on any of these positions, I will try to exit it today itself, and then see. That's what the plan for now. And then as I said, I have only one position today, which is which is a bounce back position. In case if Nifty really turns back positively, I think I'll make some money. In case if it doesn't, I will lose some money. But then this is probabilities shows only 23%. Usually I do not do this kind of trades, but then I thought I'll give it a try today, mainly because there is a 200 DMA support there. I think that's all for now. And I think in the previous the webinar that I had to disconnect, somebody asked if I'm trimming now the portfolio. The answer is no. I mean, obviously I exited some because I had to pay for my new house, but otherwise the intention was to obviously stay invested. And these falls, I think it's predominantly, I think they will keep happening. I don't think we need to be much worried about them. All right, then and I'm continuing with the SIPs in the mutual fund, so I did not really discontinue. I think that is also important. I'll continue to do that. Have a great remaining day, and also obviously have a profitable day. Bye bye.